Every 50 years, the financial system you trust collapses and resets, like clockwork. 1821, 1914, 1944, 1971. And now, we're at year 54 of the current cycle, past the expiration date. Central banks are panic buying gold at rates unseen since 1950. The petrodollar is dying. The Fed is trapped between crashing the economy or unleashing hyperinflation. You have maybe 24 to 60 months before the rules change overnight, before your cash loses 40% of its value in a weekend, before bonds crater, before pensions evaporate. The reset isn't coming. It's here. And you're in stage 4 of 5. Every monetary system begins with stability and trust. A new framework gets established with either gold backing, commodity support, or strict fiscal discipline. Currency holds value, inflation stays low, international trade flows smoothly, governments maintain reserves, central banks behave responsibly. This honeymoon phase typically lasts 10 to 20 years. For the current fiat dollar system, Stage 1 ran from 1971 to 1985. Despite losing gold backing when Nixon closed the gold window, the dollar remained strong because U.S. economic dominance was unquestionable. The petrodollar system locked in during 1973-74 when Saudi Arabia agreed to price oil exclusively in dollars. Paul Volcker's Federal Reserve crushed inflation by raising interest rates to 20% in the early 1980s, establishing credibility through pain. During this stage, everything feels sustainable. Governments promise the new system will last forever. Citizens trust the currency. Nobody questions the foundation, yet. This is where governments begin abusing the system they promise to protect. They print more currency than economic growth justifies. Deficits become permanent features, not temporary emergencies. Central banks monetize government debt quietly. Inflation rises to 3.7% annually, not hyperinflation, just a steady erosion of purchasing power that most people accept as normal. Asset prices inflate dramatically. Stocks climb. Real estate soars. Bonds appreciate. People feel wealthy because their portfolio values rise, but real wages stagnate. The wealth gap widens silently. The middle class works harder for less, while asset holders get richer simply by holding. This stage lasts 15 to 25 years of slow-motion wealth transfer. For the fiat dollar, Stage 2 ran roughly 1985 to 2008. Persistent deficits expanded. National debt grew steadily. Asset bubbles formed in tech stocks, then housing. But the system appeared stable because inflation seemed controlled and GDP growth continued. Nobody saw the fragility building beneath the surface. This is where decades of abuse become unsustainable. A major shock exposes the system's fragility, war, pandemic, financial crash, or geopolitical upheaval. Governments respond the only way they know, printing massive amounts of currency. Debt explodes. Central banks lose control. Inflation spikes beyond the manageable 3-7% range into dangerous territory. For the fiat dollar system, Stage 3 began with the 2008 financial crisis. The Federal Reserve printed $4 trillion through quantitative easing, unprecedented at the time. National debt doubled from $10 trillion to $20 trillion by 2017. Then COVID struck in 2020. The Fed printed another $5 trillion in months. Debt jumped to $28 trillion, now sitting at $36 trillion. Inflation spiked to 9% in 2022, the highest in 40 years. The system is breaking in real time. What took decades to build is unraveling in years. Stage 3 reveals that the prosperity was borrowed, not earned. This is the panic phase where central banks try desperately to save a dying system. They raise interest rates to fight inflation, but high rates crash the economy. They cut rates to stimulate growth, but that reignites inflation. They're trapped in an impossible position with no good options. Governments impose capital controls, price controls, and currency restrictions. International tensions escalate as countries blame each other for the crisis. Alternative systems emerge as nations lose faith in the dominant currency. This is where we are right now in 2025-2026. Stage 4, the intervention phase. The Fed raised rates from 0% to 5.5% in just 18 months, the fastest hiking cycle in history. This temporarily stopped inflation, but triggered a banking crisis. Silicon Valley Bank, Signature Bank, and First Republic collapsed in 2023. Now the Fed is paralyzed. Rates above 4.5% crash the economy. Rates below 3% reignite inflation. There's no escape route. This is the endgame. The old system collapses or gets abandoned entirely. A new system is negotiated or imposed by force. Currencies get revalued overnight. Debts are restructured or defaulted. Wealth transfers massively from paper holders to hard asset holders. This stage is chaotic, painful, and fast, typically happening over just 2 to 5 years. Previous resets prove the pattern. The 1925 reset took 3 years to fully implement 1922-1925. The 1944 Bretton Woods Agreement was negotiated and deployed in under 2 years. The 1971 Nixon shock happened over a single weekend. Markets closed Friday under one system, opened Monday under another. The next reset will likely occur between 2025 and 2030. Based on historical timing and current instability indicators, we're approaching the event horizon rapidly. The reset won't be televised in advance. It will happen suddenly during crisis and reshape everything overnight. One of these 3 outcomes will materialize within the next 5 years. Each represents a different path, but all end the current dollar-dominated system. Scenario 1, the gold reset. Central banks continue aggressive gold accumulation. A crisis triggers coordinated announcement that major currencies will be partially gold-backed again, not a full 1821-style gold standard, but perhaps 20-40% backing. Gold gets revalued from $2,700 per ounce to $10,000 or $20,000 to make the mathematics work. Countries with large reserves, US, Germany, Italy, France, Russia, China, benefit enormously. Nations without gold suffer. The dollar remains a reserve currency but shares status with the euro and yuan. This is the orderly reset, similar to what happened at Bretton Woods in 1944. Scenario 2, the digital currency reset. Central banks launch CBDCs, central bank digital currencies, as the new system foundation. Dollar, euro, yuan all become fully digital. Cash disappears. End the digital reset. Every transaction becomes tracked and controlled. Governments gain total spending oversight through programmable money. This enables negative interest rates. Your digital dollars lose value automatically if you don't spend them. Targeted stimulus means government sends money only for specific approved purchases. Social credit systems determine whether your money even works based on compliance with rules. China is already testing this with the digital yuan. The US and Europe are developing their own CBDCs quietly. Scenario 3, multipolar chaos. This is the disorderly reset where no agreement gets reached. The dollar loses reserve status not through coordination, but through rejection. BRICS countries trade in their own currencies, or a BRICS unit. Europe uses euros exclusively. Asia adopts the yuan. The world fragments into competing currency blocks. Exchange rates swing wildly. International trade contracts sharply. We enter 5-10 years of monetary chaos before a new system emerges, similar to the 1930s collapse. The signs that we're approaching stage 5 are overwhelming and undeniable. Evidence 1, record gold buying. In 2023, central banks purchased 1,037 tons of gold, the highest since 1950. In 2024, they bought another 1,000 plus tons. They're not buying for investment returns since gold pays no interest. They're buying because they know the dollar system is ending and gold will anchor whatever comes next. Evidence 2, BRICS expansion. BRICS invited 6 new countries in 2024: Saudi Arabia, UAE, Egypt, Iran, Ethiopia, and initially Argentina. The expanded bloc represents 46% of global population and 37% of global GDP. They're actively building payment systems that bypass the dollar entirely. Russia-China trade is now 90% conducted in rubles and yuan, $0. This was unthinkable 5 years ago. The de-dollarization is accelerating, and the petrodollar system that sustained dollar dominance since 1974 is crumbling. Evidence 3. U.S. debt spiral. The U.S. carries $36 trillion in debt. Annual interest payments hit $1.2 trillion and are projected to reach $2 trillion by 2030, exceeding the entire defense budget. The deficit runs $2+ trillion yearly with zero plan to reduce it. Foreign creditors are abandoning treasuries. Japan's holdings fell from $1.3 trillion to under $1.1 trillion. China dropped from $1.3 trillion to $760 billion. The buyers are disappearing. Evidence 4. Petrodollar breakdown. Saudi Arabia joined BRICS and now accepts yuan for Chinese oil purchases. The WUA accepts yuan. Russia sells oil in rubles. The requirement that oil be purchased in dollars, the foundation supporting dollar demand since 1974, is ending. Evidence 5. Feds lost control. The Fed admitted they were wrong about transitory inflation in 2021-2022. They raised rates so aggressively it caused a banking crisis. Now they're trapped, with no effective tools remaining. 2026, current phase. Stage 4 continues. Fed cuts rates responding to economic weakness. Inflation remains elevated at 3.5%. Stock market volatility increases. BRICS builds alternative systems. Gold potentially rises to $4,500 per ounce. Treasury yields spike as demand falls. The 10-year could hit 5.5–6%. The dollar weakens but doesn't collapse yet. 2027-2028, crisis trigger. Something breaks. A failed treasury auction where buyers don't show up. Major geopolitical conflict, Taiwan, Middle East oil disruption, sovereign debt crisis in Europe or Japan spreading globally, major bank failure cascading through the system. The Fed prints $5–10 trillion in months, destroying final confidence. 2028-2030, the reset. A new monetary conference convenes like Bretton Woods. The outcome, partial gold backing, full CBDC digitalization, or multipolar fragmentation. Currencies revalue. Debts restructure. Wealth transfers from paper to hard assets, permanently. The 50-year monetary reset cycle isn't theory, it's documented historical pattern repeating with perfect consistency for over 200 years. 1821, 1914, 1944, 1971, and now we're at year 54 of the current system, past the typical expiration point. Every indicator that preceded previous resets is flashing red simultaneously. Record central bank gold buying, BRICS building alternative systems, petrodollar dying, U.S. debt spiraling beyond control. The Fed trapped between recession and inflation. You have maybe 24 to 60 months to position before the reset happens. It won't be announced in advance. It will occur suddenly during crisis, a weekend emergency meeting, a coordinated central bank announcement. By Monday morning, the rules will have changed. If this opened your eyes to the cycle controlling your financial future, subscribe now. The next videos cover exactly which assets to buy, which to sell, and the month-by-month timeline as we approach Stage 5. The reset isn't coming, it's here.